Good morning and welcome to the XM.com weekly market update. And joining me again is Peter Maguire, the CEO of XM. Good morning, Peter.
Good morning, Andrew. How are you?
I'm well, thanks. Let's start domestically. The Australian monthly CPI indicator came out yesterday, 3.5%, which was sort of more or less what the market was expecting, down slightly, but it's still hovering above that 3% mark pretty steadily. So yeah. It makes it tough for the RBA, whereas they probably want to raise interest rates, but that's probably not going to happen at all, considering the economy here is not overly strong at the moment.
That's exactly right, Andrew. I mean, you've summarised it. It's the storyline is, it's moving in the right direction. It's sticky, and with ECB, quite probably the POMs, and of course the Fed cutting rates in the next 3 weeks. I don't think there's any chance that we're going to raise them. We've just got to ride this down. But yeah, I think it's going to be a tough Christmas for retail sales in Australia, and all of that washing across, and the impact if the property market has any sort of pullback, and what happens to the stock market here. So yeah, I think September and October are going to be very telling months.
Yeah, it could be. Head up to Japan, as we know, plenty of activity up there in recent months. Their inflation rate, it's sort of, they're the opposite. They actually, a bit of inflation in Japan is probably not a bad thing. That came in at 2.8% again.
Yeah, exactly right. Yeah, it's been that's the reason why you saw two rate rises this year, and big chance you might even see another 15 basis points by end of year. So the story, Japanese yen running at that 144 sort of handle. Nikkei's had a bounce back. So yeah, let's see again how this rolls over the next month or two.
Yeah, and we've spoken about it in previous weeks. The yen and what's been going on the last couple of weeks has been pretty extraordinary, but great for currency traders that like volatility.
You betcha. Yes, Andrew, the chart tells a story over that 2-month window. If you traded one market and you're looking there, July and August, for yen versus dollar, it's just been extraordinary. Absolutely. Very rarely do you ever see in a small window, a 6-week period, 20 yen being stripped out, 163 to 143 sort of handle.
Yeah, plenty of activity. And another cracker, gold, 1-year chart. Would have been a good buy 12 months ago, Peter.
You betcha, Andrew. Well, you saw that low early October, 1807, and then you saw the Israel that weekend, and then it was off to the races, and it hasn't disappointed. 25.50 sort of handle. It's running at the moment. I've got notes here. You're looking at about 25.43 on the screen at the moment. So yeah, strongly bid up, Andrew. Everyone's saying 26 and 2,700 are the new homes for it prior to October. So is it going to happen? Hard to argue against, and many analysts are saying, we've done a special, you and I did this a couple of months ago, and the traders can have a look at that, as far as you put together a really good paper on central bank buying and the retail surge in gold. You can't walk away from it. 3,000 every opportunity and every possibility. If that US dollar comes under further pressure to the downside, geopolitics ticks up, and if you were to see some sort of hiccup with equity markets or economically globally, gold's on a tear.
Certainly is. That chart tells a story.
And silver, Andrew, as well. We can't discount at 85 to 1 as far as the ratio. I watched an interview the other day, I think it was 2 days ago. Jimmy Rogers was on with Avan out of NDTV. And Jim said, silver is the one to watch. Now, everyone's been saying it, the undercapitalization or under investment over the last 1 or 2 decades globally. So yeah, don't take your eye off silver.
Yeah. And oil, we've spoken about this many occasions, where it sort of looks as though it's heading up towards sort of $90, $95, and it seems to hit a ceiling and fall away again.
Yep, exactly. It's range bound. I mean, it's still, when you're looking at the chart, Andrew, you can't walk away from it in the sense of movement. There's still plenty of movement. And you saw last night, there was relatively good, just giving an idea, a couple of percent movement over a couple of days is a couple of bucks. And if you can pick up a $2 or $3 swing, you can't walk away. You never go broke taking a profit. You know that.
Yeah, you're correct. It does look range bound, but within that range is actually plenty of movement, which is, once again, for the traders out there, is a good thing.
Yeah, exactly. And you know, fundamentally, you can ride the story, you can look at the technicals, and then you look as well with oil, of course, seasonality demand and what happens. We're at the tail end of US summer and Northern Hemisphere summer. Now you're starting to swing into those cooler months coming on and hurricane season building. The middle of the hurricane season is traditionally that 10th, 11th of September. So we're nowhere near that. And we've got all of that to roll through, of course, in October and November.
Yeah, keep an eye on that there. And finally, we don't normally talk about individual stocks, but obviously Nvidia has been a pretty incredible story over the last 12, 18 months. Their results came out last night, another beat, basically. So they're sort of both up on revenue and EPS, but that chart gives you an idea of what it's done. But some of their key statistics, the return on invested capital, 28, which is pretty extraordinary. EPS, that $1.81 is just for 3 quarters of this year. Last year, 12 months was about 90 cents. So they've more than doubled with 1 quarter to go, and income, 30 billion.
Yeah, I don't know really what to say. I mean, that's a great case study for any trader even new to equity markets to just look at that company over the last, say, the start of January 2022, when you had, and I've got some numbers here on Bloomberg, it's coming up, but you had revenue, Andrew, in sales for revenue in January of 2022 at around about that 5, and that's the quarter, of course, about 6 to 7 billion. So you've 4 times the growth in 20 months as far as income. It's not many companies do that.
No, it's some of those big tech companies outside, even the Magnificent Seven, but other ones obviously come out with impressive numbers anyway, and they're full of cash, these companies. But yeah, it's pretty extraordinary.
Yeah, so that's a good one for everyone to study and just, realize the AI boom and do your own research on that. It's, it's easy to find out, and you really learn a lot by analyzing and understanding the key drivers of a business model like Nvidia.
Yeah, for sure. All right, well, that's the wrap for this week, and we'll catch up again next week.
I look forward to it, Andrew. I think we've got a big week ahead of us. We roll into September. We're two months out from the election, and that's starting to gain again some interest. And of course, since we spoke last week, you've seen RFK Jr. join the MAGA party. So that's going to be again fascinating. And he's not backwards in coming forwards in the sense of his discussion points and what he sees as far as making America healthy again. That seems to be his number one agenda.
Yeah, it seems to be. And also we've got some key stats out of the US, the GDP and PCE numbers later this week as well.
Yeah, tomorrow. Yeah. So don't wipe yourself away from this week, because there's plenty of opportunity over the next, say, 46, 45 hours of trading till Saturday morning our time.
Yeah, for sure. All right, Pete, great to catch up, and we'll regroup next week.
Look forward to it, Andrew. Thank you.
And that's the XM.com weekly market update.